It's a bull. Good Monday morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals, as you know, in beautiful Lauderdale by the Sea. Look at that, 65 degrees and absolutely lovely out there. I see a couple guys out there trying to learn how to surf, don't know where they went, but nice little day for teaching the kids how to surf and learning how yourself with that little tiny wave out there. Well, it's not a surf report. We're here to talk about precious metals and other things. Got an interesting show. Got a response back on an email from Ted Butler about a question I had asked him, and also an updated report on his newsletter, which I'll share with you a snippet, which I believe is okay. And what the best deals are out there right now. We'll take a look at the best deals on silver and gold. We'll get through that real quick. And a couple other things too. Yeah, the slam that I think we might see on Thursday and why, or maybe the opposite. Tough to say, but I'm going to kind of delve into that as well. Meanwhile, let's move along. Oh my gosh, look at that fun little shore break there. Tiny little wave, but still lots of fun. Dr. Bernanke explains quantitative easing. I'd usually put quotes up here, but I thought this was so fitting, really. Even though Bernanke's no longer around, you know, it was known as helicopter money. Bernanke, I think, was the guy in '08 that actually went big. He didn't go home. He went big and he went home. So if we feed the banks enough dollars, something good is bound to come out the other end eventually. I believe that the Fed is stuck between a rock and a hard place. No fiat currency has ever survived longer than the U.S. dollar right now. Since we've been off the gold standard in 1972, I think we are really, pound for pound, the longest surviving fiat currency. Someone out there said the British sterling is, but I'm not sure if that's true. No less, I believe we are the longest surviving fiat. And the banks know this, central bankers know this, guys Bernanke and Powell and Yellen, they all know this. They are captains of a sinking ship that just keep getting replaced. And each new captain that boards that sinking ship is completely aware that the ship is sinking. They know exactly what they need to do, which is jawbone the passengers of that ship, make them feel comfortable, try to maintain a steady, calm markets as much as possible, and make their money on top of it. I mean, they're going to make money regardless of what happens. Central bankers will never have to tighten their belts for a meal ever, nor will their buddies, friends, and politicians and such. But it's the working people that get screwed on this mostly. However, the job of the Fed chair people is just simply to jawbone the comfort. As the ship goes down, these people are going to simply tell you, relax, relax. It's all part of the big plan. Enjoy the dip, enjoy the swim. Everything will be back to normal soon. And that's the job of these people, the Yellens, the Powells, and the Bernankes. Okay, the ship is sinking. Their job is just to make sure that you stay calm as you slowly slip under the water. That was kind of macabre, but let's take a look at the spot prices here and see what's going on. I'm going to do a quick refresh. Up today, kind of surprising. Again, I think that could change this week with a couple reasons, again, I'm going to get into, but let's take a look at the overnight markets, 1808. I believe that's, I think it's a 200-day moving average. I've been saying 200-day moving average for a while. That 1810 or 1808 is a 200-day moving average. I could be wrong on that, but we're back in that 1808 and above range, kind of maintaining its own. 1816 currently, you know what, an $8 range there, $7.40, big deal. Silver too, looking pretty good, making its steady climb, 50% increments, and I like 50-cent increments as long as the ultimate destination is upwards, and that's where we are when we're seeing these rubber band slingshot type effects here in the morning. Let's see if it happened today. I don't think so. I don't think we had any monkey hammering this morning. I think they're loading up for monkey hammering on this Thursday. Again, we'll see. I'll let you know what I think here shortly. Silver $22.95 currently, $22.57 the low, $22.97 the high. Platinum at $1,021, hung on to that $1,000 mark pretty handily so far. I think it will continue to do so, but $1,012, $1,032. Folks, all these metals are cheap in my opinion. In the grand scheme of things, in the history of gold, you will look back and say 1800, you'll say $2,000 gold. You'll be talking to someone someday about gold, and you'll say, "Gosh, I remember when gold used to be $2,000 an ounce." All right, and I don't think it's going to be too far off in your future. You know, a lot of us can remember when gold was $200 an ounce, $250. Some of us can remember when gold was less than $100. But a lot of us remember in the last decade or two gold sitting in the, well, don't forget we did hit a high in 2012 before the big commercial bank JP and others monkey hammered that market down to almost nothing at some point. But no less, these markets, you know you're going to be up overall. I think someone had made some comment the other day, oh, silver hasn't done anything. Oh, it was $50 an ounce in 2012, and since then it has. Silver's done a lot since then. I mean, one thing about silver and gold is that it's not like crypto. When you hear that, oh, it hasn't done anything last year, I'm so disappointed, I'm going to cry, and I can't buy silver or gold anymore, it's a bad idea, or what that's usually folks that don't understand gold and silver markets, don't understand why they're buying into it. And also, a lot of younger folks, and I'm not picking on younger folks, older folks too, the folks that want it now, the folks that are impatient, the get-rich people that have that get-rich, the reason they got into markets, the reason they got into crypto is to get rich, the reason they got into equity markets or bought this penny stock is to get rich. Well, there's a lot of get-richers out there that are going to be very disappointed if they just hop in the gold and silver market and don't see that 45-degree trajectory upward like you would see in highly volatile casinos like the crypto markets and some penny stocks and stuff as well. And remember, the stock market has been hot for the last decade or so. You know, in a hot market, in a good market, everyone's a frickin' genius. All right. So anyone that can give you good advice on precious metals when we've been in these sideways markets and these downward markets, and they seem to be spot on. You know, those are the experts out there. Like I said, everyone's an expert in a bull market, but in bear markets and sideways markets and markets that don't appear to be going up vertically all the time, it takes a real genius to figure that stuff out. And here's the real secret, folks. You don't need to be a genius to figure out the price of gold and silver and platinum are ultimately going to go up. Why? Because again, fiat currencies, the decline in the value, I'm going to show you right here. Here's another reason you're never going to have to worry about gold and silver going down. And where is that? There it is, right there. This is it right here. Simply, explanation right here. All you got to do is look at this graph and realize this is the purchasing power of the consumer dollar in the U.S. average city. Now, mind you, this is from 1920 onward, but here's where we became officially a fiat currency right here. These are recessions right here, those little gray lines. And as you can see, it's been ever declining graph here. On the graph, that line keeps going down. Your purchasing power of the dollar keeps continuing going down. And folks, the only reason gold and silver would go up in value is if this line started going up instead of down, okay? I don't care. When they talk about dollar strength, big effing deal. Dollar strength only means against other basket of currencies and who is the last horse to the glue factory. And that would be the U.S. dollar, in my opinion. The U.S. dollar will likely, in major currencies, be the last horse to the glue factory. Is being last horse to the glue factory really winning? Not at all, folks. It still ends up being put into a vat of glue, okay? Just the last horse to do it. So until we see this line right here, which I don't think we're ever going to see until we do some kind of economic reset, financial reset, and base our dollar on a real, limited, back it by gold or something like that. But no less, unless we see that happen, this line is going to continue to decline, and you will most definitely one day say to your friends, God, I remember when gold was 2,000 and silver was. Remember when silver was less than $50 an ounce? And remember when platinum was 1,000? Oh my God! People say, and your friend will say, "Yeah, I wish I had bought more," and you'll say, "Me too." However, mind you, I'm not advising you to go out and buy this as some crazy investment. Gold and silver is always, and this is my opinion. All this stuff is my opinion. I've always encouraged you in my videos every day. At the end, I say, think for yourself. This is my opinion. Make up your own determinations. I am simply here to share what I know and share my opinion with you, okay? Take it for what it is. But no less, you're going to look back and your friends are going to look back and wish you had bought more. I think I say that all the time when I look back decades ago. No less, wealth preservation. Remember, gold and silver does not pay a dividend. So there are reasons. You wouldn't put all your eggs in one basket. I wouldn't put all my money in gold and silver. And that's tough for me to say because I get all my money in my business pretty much. But I certainly plan on diversifying more here in the future. Once I see real estate prices, I think, adjust themselves downward. I think we're in the greatest bubble of all time when it comes to real estate and stock equity prices and a lot of other things out there. Let's take a look at the overnight markets. We did not. There's that blue line from Friday. We did not see that slingshot effect today. In fact, markets are kind of a little on the upward trend in gold. Overnight markets, a little bump here downward, but back up. Again, did not see this. I think they're saving this. See this snap downwards right here, this monkey hammering that you're seeing? And again, it's been snapping back up. I think on Thursday we're going to kind of see that, maybe, but I'm not sure we're going to see this. On the other hand, too, it depends on the numbers, and like I said, we'll talk about that in a moment. But mostly with silver, I think we're going to see that. Take a look at this. You know what's funny, too, is look how closely aligned the price of gold and silver are on these charts, especially the overnight charts. I mean, you could almost lay these lines on top of each other. And that's what I've been telling a lot of you silver guys out there. You know, even though silver is probably the most monkey-hammered market out there, the people that are doing that, the people, those big commercial short positions that are doing that, now also have to keep the price of gold down. And I'll tell you why, because where gold goes, silver will most definitely follow. It may lag a little bit, may take a little time, but it'll definitely follow. And we know for a fact that gold is going to take off at some point, and it won't be too long in the future, in my opinion. Last year was a shit year because of the BOFA laid off 800. We'll get into that too. Ted Butler talks about that. BOFA laid off 800 million ounces of silver and 30 million ounces of gold. No wonder. Real stuff too, not the paper, folks. No wonder we had flat markets last year. So all you folks that are talking about, oh well, it didn't, you know, the inflation didn't affect gold and silver. This didn't. You're completely not looking at the big picture here and understanding that, yeah, inflation, it may have not seemed like inflation affected the gold price and silver price much, but someone laid off a year's worth of mining supply of silver into the market last year. Physical, not paper. And what do you think that does? It just amazes me that people that believe the official narrative and the official numbers on the CPI and the official figures on unemployment and all this stuff. And God, you see what happened on unemployment this last week, the unemployment figures. They completely screwed it up all last year, and they kind of stacked it all this last month. It was completely fixed, folks, all right? So it amazes me that the naysayers in gold and silver, oh, higher interest rates are going to, which is a stupid narrative because they can't raise interest rates high enough to make it count right now unless they did a, who was that guy? I keep forgetting his name. I'm getting old, man. Back in the 80s that raised interest rates up to, 10, 12, 15%. I know his name too, doggone it. But no less, unless the Fed does that, which they can't do because the government will default on loans, the stock market will go to hell. They're stuck in a rock in a hard place, folks. The ship is sinking faster, and Powell had better figure something to lip service the public before they catch on. And I believe they're catching on. They are. Slowly but surely, the general public, average Joe, is catching on to this. So we got into gold and silver prices. Something different I want to kind of get up front here what the best deals are. I'm going to kind of give it to you. I advertise myself. One of my specialty is physical metal markets. I'm not a chartist. I'm not a guy that deals in ETFs or does leveraging or whatever. I deal strictly in physical metals, so that is my strength. That is a strength that I have that chartists and a lot of other guys don't have at all either. So here's where I can help people mostly, and again, very, very, very pertinent to most people buying physical, is I can tell you what the best deals are and what to stay away from and what to buy, okay? And that's what I'm going to do here real quickly. I'd avoid, again, love the products, gold American Eagles, gold Buffaloes. Oh, and before I forget, I usually put JM, APMEX, and SD up here, but just because of the time, I'm going to just put JM since they're the 800-pound gorilla out there. And also, I advertise myself as a local store to beat APMEX, JM, and SD. And yes, I am plugging myself. This is one of the reasons I do the video. I'm plugging myself for my local customers. I advertise to beat these guys, so you don't have to order online for the better deal products like Valcombis. I can beat their prices on Valcombi 1-ounce bars. Now, here's what I don't do. I will not carry price product that I think is too much money. For example, where are some of these products here? These are their more common products, but higher premium products, which I don't see too much on their page, I'm not going to push you into. If you come in my store, I'm going to tell you probably to avoid these, avoid these, avoid these, and stick with the Valcombis. That's the beauty of dealing with us on a local store. One of the things I do is I just do a flat rate over the gold price, no percentage. So we do a flat rate here, and depending on the quantity that you're buying, just a flat rate over the gold price, which gives our customers always a better deal. But right now, the best deal out there for your local dealers would be Valcombis, I think. If you can get Perth or Swiss credits for the same price, as you notice, there's a $5 difference here. But if you can get these bars for about the same price, they are the best deal. If you are stuck on buying coins, my suggestion is it looks like the Britannian gold is out there. That looks like the better deal, a little cheaper than Canadian gold maple leafs. However, so for you lucky folks out there that live in my neighborhood and can come and buy from me, I do have a special on Krugerrands right now that I can beat all these prices. So definitely check with your local dealer if you don't live in South Florida and you can't deal with me directly, and let them point out what the best deals are to you. I think that's important. Also, avoid buying from people you don't know really well, no matter how well-intentioned they are. Buy from experts. This is too expensive of a stuff to get a bad bar or get a bad coin unknowingly, and from someone that really believed it was real. So try to buy and sell with experts if you can. That's my recommendation, especially for you newer folks out there. Let's take a look at silver. And again, this is something I usually do at the end of the show. I just kind of wanted to get it up front, and we can talk about Ted Butler's stuff here too. Sometimes I don't even talk about pricing on here, folks, so I do want to do this because it's something I do very well. Avoid silver eagles. Again, stick with your generic products out here. The best deals out here would be what they would have for generics would be probably Sunshine Minting. Their Silvertown Buffaloes. By the way, they make these. They own the mint. They own Silvertown, so they can afford to get them for a good price. But you know what? I can still beat their prices on these 1-ounce generics, and so should your local dealer. So that's what I'd recommend. Avoid silver eagles for sure. Beautiful, lovely product. No tax advantage in buying them, folks. None at all. You still got to pay taxes on them. Sales tax may be under $500 in Florida, but if you're spending over $500 in the state of Florida, because $500 is the sales tax limit. Over $500, there's no sales tax on bullion items in Florida. So the best deals out there are generics. I would stick with 100-ounce bars. But you know what? 100-ounce bars might be 25 cents an ounce cheaper than 10s, maybe in some places. In our store, I think we're almost the same price. But if 100s and 10s are the same price, buy the 10s, really. Smaller increments are always a little bit better, in my opinion, because you can break it up. Ones are going to be a little more expensive, but still way better deal than silver eagles, way better deal than silver maples, way better deal than silver Krugerrands even, which seem to be reasonably priced as far as all these products go. And of course, we always get some odd products in our store where we can actually save you even more money than this. So you'd have to come into the store to see them. And we're open 10 to 4 Mondays through Fridays. All right, I got my plug out of here. Let's take a look at something that a lot of folks have been asking me, Goldbacks. I'm going to do a quick sip of coffee here, one sec. I have to admit, I completely misunderstood what Goldbacks are. However, I still not sold on them per se, but the Goldback per se, actually. The Goldback is kind of interesting out of all the currencies out there, things that are trying to be like a currency or an exchange unit. Using gold is very interesting. The fact that Utah made it legal tender in the state of Utah and merchants can use it kind of perked my interest a little bit. The only thing I didn't like, and I get it completely, is that the cost of these things is really almost about double or more of what the gold is in them. But they're kind of cool, and from what I can understand is that very little of it actually gets spent. Maybe 2% or 3% of it in Utah was actually used at merchants. But the idea that any of it was used and merchants would even accept it was intriguing to me. So I read a little more into this. I really don't see it. I think it's cool. That's the thing, is I don't want to diss it or anything like that. I might own a few of them because I honestly believe they're going to be collectible. I don't think we're ever going to get, first off, the banks and government hate competition. So the idea that these would become commonplace in stores and retail transactions, I just don't see it. For the other reason, too, is you've got to do the transaction rate, which is right up here. There's their calculator, for example. Let's take a look. And for amount owed, say a merchant, and this is for a merchant site, which I thought was pretty cool. Say a merchant is owed $400. That is going to be 106 Goldbacks. that they'd have to pay for a $400 sale. And Goldbacks paid by customer. It even gives you how much change you should give back in US dollars. There you go. Pay this customer this in change. Something looks wrong there. But anyways, I guess, no, I don't think you'd want to give them back $1,000 if they owed $400. That's kind of weird, but maybe I'm looking at that wrong. But I like the concept. It's kind of interesting. I could see, if the world went to hell in a handbasket, I could see people trading these things a little bit, but, not really on the other hand as well. Even during the worst part of the German inflationary, hyperinflationary period, prior to the war, the old story about a wheelbarrow full of German marks took to get a loaf of bread. They still use the marks to get the bread, not the gold. But the advantage of having the gold and silver, and this is a confusion that a lot of people think. A lot of people think in a hyperinflationary period that there will be no currency. Of course there's going to be a currency, even if it's a dollar. Even in Nigeria, they were using probably euros and dollars as well, next to a Nigerian dollar that was worth 5 billion to 1 at one point. But they still used it to buy bread. It may have taken a wheelbarrow load, but they weren't using gold and silver to buy bread with. What smart people did is that they had their money in gold and silver, and as the price of the dollar and the Nigerian dollar, the German mark, started to go downward and become worth less and less and buy less and less, the gold and silver did maintain and increase in its value as well. So what they were able to do is go down to the local merchant that bought gold and silver, whoever the gold and silver buyers were, and trade in their gold for a wheelbarrow full of marks, a tiny bit of gold for a big wheelbarrow full of marks. That's how they kept up, folks. Nobody, even in German inflationary times, was using gold. Well, they did have gold and silver currency back then, but nobody was using gold bullion or silver bullion to make purchases. They were still using the German marks, even though it took a wheelbarrow full. So I don't see this going anywhere, but I see it as a unique collectible. And the fact that it's actually being used as a trade unit, it's encouraging to me. We need more type of competition out there when it comes to the U.S. dollar. Competition is good for everybody, for everything. If you've got something competing against you, you're going to tend to work a lot harder to keep your audience and your customers, okay? Generally speaking, friends, whatever it may be. Well, let's take a look at the stock market here, kind of sideways. There are a lot of reports coming out this week in the, as far as CPI data, and that's kind of what I wanted to discuss here, why I think that the markets are going to get knocked down, possibly. Again, depends on how the CPI data comes in on Thursday, but I think we better look out for some market activity one way or another in precious metals, and most likely on the downward side, given history, how they do this, how they monkey hammer these markets around these announcements. So let's move into, not too much to look at here, everything's sideways. Let's take a look at, this is something I wanted to show you too, because they are updating this is the, sorry, don't mean to make you dizzy. This is the misery index. Oh, wow, it's a long one. United States misery index, how miserable do you feel? This is by month, okay? That's why the page is so long. This red part represents inflation. The blue part represents, this is the two factors they use for the misery index. The blue part represents unemployment, okay? And as you can see here, there we go. That was the wartime there. Let's take a look, and we're going to move down to Joe Biden's time. And of course, you can see that these numbers vary. The misery index varies between 6 and 8. Seems to be an average 6, 7, 8. And then in times of hardship, there you go. Nixon. There's your inflationary years during Nixon in the 70s and the 80s. You can see inflation rates went up substantially. So did the unemployment rates. And again, as you can see here, inflation rates just continued to climb. It looks like unemployment got a little bit better, but stayed the same throughout that whole decade there. And Ford gets into office, and again, just absolutely crazy when it comes to unemployment. Everybody remembers what the Fed had to do. Volcker, I think it was now, had to raise interest rates up to that, close to that 20% marker. Not quite, but some rates got as high as 20%. So people were paying as high as 20% on mortgages at one time. So there you go. And again, as you can see, the unemployment rates start to rise again, as does the inflation rates. Ford really caught the gist of Nixon's fiat policies right here in the inflation of the 70s, which continued to climb, and the decline in the buying power of the dollar as well. As you can see, the printing presses were starting to get full on, at this point. But take a look at this. Everything was growing. These are awful times. Look at the height of that. 1990 would have been the misery index. That looks like the highest print here I can see. And then it starts to decline downward over the decades here, as you know. But again, same thing. 80s. There it goes. Bumps its head up again. Carter. And take a look at this. In the misery index is in the 21, 22 range, and I kind of think we're going to start seeing that again. Under Reagan, this starts to fall, unemployment starts to fall, but most importantly, you can see that the inflation rate starts to fall here. But let's move down. We can talk about every president here, and we're going to just kind of look at all these folks. You can see, again, averaging in that 7, 8, 6 range for the misery index until we get to where? 2020, I think, exactly. Obama, well, this is 2008. Remember, we're starting to see inflation here. The printing presses were full on. Here's your sad times right here. And again, low inflation rates because we were in a recession at this time. But watch what happens down here. Watch what happens when we get to, there you go, 2020, which was under Trump's reign there. There is the critter 19, and as you can tell, unemployment just skyrocketed. Look how small inflation rates are as well, and stayed until we got into whose administration, where unemployment rates, look at this blue line, see how it starts to shrink as we go down? But look at that red line. This is not good. This is very unique too, and we're at a 10.94. I think Biden's on his way to doubling this number to a 20, and similar to what we had in Carter times as well. They may be able to keep that blue line small, but that red line I think is heading higher. I don't see it going backwards, unless, of course, again, they manipulate the CPI figures, which I think they do anyway. But I don't think they can manipulate them downward too much. I mean, it's just not possible. I think that level of monkey hammering CPI rates downward or manipulating rates downward, they just can't do it. I think they're stuck actually where they're at right now. So the CPI, I think, will actually not. The CPI rate, I think, will be up, but maybe not as much as they thought it would. I'd be surprised if it's down. I doubt it at all. Let's take a look at what I'm talking about. And this is why I think on Thursday, looking ahead, and this isn't zero hedge, we'll soon move on to the U.S. CPI on Thursday. And what have I been saying for a long time? Usually when these kind of numbers come out, or when the Fed starts jawboning interest rate hikes, this is when the big banks, the big commercials come out and start monkey hammering the price of gold and silver. Not that the CPI is going to do anything that should really realistically cause the price of gold and silver to go up or down. Actually, it should be going up, the price of gold and silver, but there should be nothing in there that causes the price of gold and silver to go down. However, this narrative will be spun that inflation is not as bad as they thought, employment rates are better than they thought, therefore the real return on bonds and the real return on treasuries and stuff will surpass the cost of living. So this is what they're going to try to report. This is what they're going to try to paint. And of course, they're going to say that gold never performs well on this. And the idiots, the fund managers out there, the people that just solely work on, they're solely data driven, and they trust completely the CPI numbers, and they use the CPI. And this is what I've been talking about for a while. If the CPI is rigged, or if employment numbers are rigged, if all the data is rigged, how accurate are your algorithms? How accurate is your charts, folks? Seriously. And I kind of think that if you can purposely rig the data in your favor, that's what they do out there. So look, CPI, in terms of what to look out, note that 8 of the last 10 CPI releases have been the monthly headline figure coming in above the consensus estimate on Bloomberg. DB's economists are projecting that the monthly CPI growth will slow to 0.36 in January. Core inflation slowing to 0.36. Now remember, they're talking about slowing, not going backwards, folks. They're not talking about inflation getting smaller or lower. They're talking about inflation just slowing a little bit, and they're talking, their estimate is 0.36. So if it does start to slow, or if I don't think it's going to go backwards. So if it just starts to come in less than they believe it did, I believe that you'll start to see gold and silver prices get monkey hammered. But it'll do the same thing. It'll slingshot back once people determine that that was just a bullshit narrative again. Let's see what else we got. He says, no, anyways, you can read this for yourself. It is in Zero Hedge. Probably a good idea to read this anyway. Key events for this week, all eyes on the CPI. I think as precious metal, people should keep an eye on the CPI too. If the print comes in lower than the expectations, take the opportunity, in my opinion, to buy the dips in gold and silver, which I think we might see. If it comes in higher, we could see gold prices shoot up higher as well. Again, just my opinion. Remember, I'm a physical trader, so charts and all these other things are not my expertise, but I also go by my gut feeling. And also, looking at gold and silver prices every day, I see trends, you know. I can see trends happening. I can see. This is why I talk about the Fed jawboning. I've noticed for decades when the Fed comes out and jawbones rates, gold and silver gets hit in the morning, and then and it's usually done by these big entities that are just simply using the narrative as an excuse to manipulate the price down. Well, let's move into. I got a letter from Ted Butler. God, I won't say I love this guy. I don't want to come off the wrong way, but he is very astute when it comes to what's happening in precious metals. I don't think he minds me sharing this. It's nothing personal or private, nothing that I don't think he would share with you as well. This little comment here is just something else we had discussed at the top, and oh, there we go. So my question to him was the way that this leasing kind of works. Would Bank of America, because you can't see my question here, would Bank of America, would they have sold it all at once when they got that 800 million ounces of silver from JP? Would they have sold the gold bullion all at once? Is this maybe why the price of gold and silver went down? Is because real physical, huge amounts of it were sold into the market last year. And this is what kind of Ted brought up to me. As far as your question, the way the not-so-precious metal leasing work is that the metal is sold short immediately and converted into cash, which means Ted is basically saying that 800 million ounces and 30 million ounces of gold that both Bank of America purchased from J.P. Morgan, as soon as they purchased it, they immediately laid it off for cash in the market, okay? And it says here, there's no reason for a borrower to hold borrowed metal in metal form. And he's exactly right. If you start to break this down logically, man, he nails it right there. We did see inconvertible evidence that the metal was sold short immediately in the 500 millions of ounces deposited into silver ETFs, mostly SLB, and the COMEX silver warehouses in the early 2020, and 30 million ounces of gold that came into the COMEX markets gold warehouses at the same time. All right, and again, this is why I love Mr. Butler, because he understands this data. He can read this data and he can interpret it, unlike a lot of folks out there that think they can, and there's some that can. This man can do it, and he can show you where and how the manipulation is done and who the players are even. Most people just assume, all right, and most people just kind of take what they hear from him that gets circulated in the communities and say what he says, kind of what I'm doing. The difficulty in grasping this is largely, well, one second here. Okay, the difficulty in grasping this is largely in trying to comprehend just how nutty and fraudulent metal leasing is. And when you make complaints, which I'm always encouraging you to do, call the CFTC. I'm going to give you their phone number at the end here. Call the CME, make complaints, and I'm going to show you what you should bring up here. And this is not this particular. I'm going to show you part of his comments in the newsletter he wrote, but these are the things that you should discuss if you call to complain about this monkey hammering done by the big commercial shorts. But Ted kind of puts it in perspective here by saying the difficulty in grasping this is largely in trying to comprehend just how nutty and fraudulent metal leasing is. It's preposterous that collateral of a loan is sold to an unrelated buyer who is not part of the lending transaction. It's the same as a renter of an apartment selling that apartment to a third party and keeping the proceeds without the knowledge and approval of the real owner of the apartment. Yet that's how metal leasing is structured. GATA talks about this as well. And yes, when the metal is sold short, it floods the market, altering the real supply and demand. Folks, you understand this. You'll understand more than 90% of the people that make comments about gold and silver manipulation out there do. Again, read this. Pause this real quick. Read this part, especially right here. I want you to read this section and remember those old study books you used to read on, please pause now. Please pause now and read this right here and comprehend what this little comment says right here, and you'll understand exactly why this is insane. I don't need to pause because you probably already did it for. And if you're back with me, let's take a look at in Ted Butler's newsletter. And again, I'm sharing little snippets with you. I hope you don't mind. And again, I highly recommend any of you talking heads that are listening to me out there. I know there's quite a few out there that also do YouTube videos on precious metals. And we're all in the same boat. I recommend that you get Ted Butler's newsletter for sure. All right. In his newsletter, he puts out here, what do I mean by collusion? I mean that virtually every commercial trader in COMEX gold and silver futures, of which there are close to 70 traders in each commodity, mostly the same traders in each, this reporting week acted together in an obvious collusive manner to buy nearly all the contracts sold by the managed money traders. The commercial trader collusion included knowing not to reach up in price to buy, but rather to wait until the managed money traders reach down in price to sell. There's no way in God's world this could be accomplished without the commercials colluding amongst themselves. All right, so if you want to call CFTC, you want to copy this, just copy this or keep this page right here, and when you start making your complaints to CME, CFTC, explain this to them here. As to those who might counter, okay, give me 1 second. As to those who might counter, aren't the managed money traders also colluding by selling all at the same time? Ted clearly points out here, let me respond that no one colludes to lose money. So that pretty much knocks that one in the dirt, right, that response. And he's right, no one colludes to lose money, okay? Only to make money, since the commercials clearly profit from these rigged jobs lower, suggesting that the managed money traders are colluding borders on the moronic, all right? Suggest the money manager traders are colluding is just stupid because nobody colludes to lose money. So anyone that makes that argument, why aren't the money manager traders colluding by selling at the same time, is not thinking this through at all, okay? And it is moronic to say that. The repeated nature of the commercial's collusive behavior is stark and is what lies at the heart of the ongoing silver and gold price manipulation. It's not possible that when virtually every trader in the commercial categories is a buyer on a sharply lower prices, that this could be accomplished without overt collusion. It's collusion, folks. It's what I've been calling monkey hammering for decades now. It's been going on for years. CFTC does nothing about it. COMEX does nothing about it. Why does COMEX do nothing about it, the CME group? Probably because they profit from it greatly, and they've been allowing it to happen so long. If they stopped it now, they would be admitting wrongdoing and maybe open themselves up to major lawsuits. But I think they're headed that way anyway. And if they're not, they're headed toward bankruptcy in the CME group, because once people start to realize that the casino is definitely rigged in favor of certain players, nobody's going to want to play, all right? So that's my opinion. Well, what else do we got going on here? Long video today. McGuire and Hemke discuss why price suppression via derivatives may end this year, and they're talking about BIS. It's kind of interesting hearing Hemke discuss why. Hemke is a Sprott guy, okay, and Sprott is a ETF. And of course, I've had my comments on ETFs. I think that you should own it physically, but in a weird way, here's kind of something odd to hear Hemke say. Again, Hemke is a Sprott guy, and Sprott is an ETF. Hemke and McGuire agree that only physical demand for gold can break the derivative-based price suppression system, and that real metal should be the core of an investor's portfolio. Well, maybe I misread that a little bit. When I say real metal, I say real metal held in your hands, not in the hands of an ETF. Even the well-intentioned Sprott people, who I would trust. There's no better way to own precious metals than having it in your own hands. No matter what anybody says, even Sprott, you still have counterparty risk when someone else holds it for you. What if a meteorite hits the Sprott building where all the silver is held? That's counterparty risk, man. But I guess it could hit your house as well. All right, interesting article there. And hey, I'm going to get into filing a complaint. If you want, go back to my little article here with Ted Butler here, and if you want to kind of explain, ask him why. Ask him these questions. Ask him how is it that these big commercial traders all were able to buy on the low, all kind of time it exactly the same. And again, reread this, write down your little points here, and call up. You can do it anonymously as well. It says right here, place a complaint anonymously, all right? My thing is be polite and be professional. Don't be a jerk. Don't be, it's hard not to when you look that the CME group is actually allowing this to happen, and it's cost us all money. But be as polite as you can. Be and be as smart as you can. Just clearly lay it out how these commercial banks are allowed to collude and drive the price of precious metals down like that consistently year after year. Ask them why they're not doing anything about it, and let them know that it hurts you as well. All right, but again, be polite. Do the same thing with the CFTC. This is the government agency that's supposed to be working for us, by the way, who's allowed this kind of manipulation to happen for years. There's a file a complaint number right there. I'll blow that up for you. Write that down or pause this page. Do the same thing. Tell them, hey, listen, you're being hurt by this. A lot of people are. And you know what? If it's happening in our markets, it's happening in other markets. This just needs to go away. It's not constructive for anybody except these big collusive banks, in my opinion, that are colluding with each other. Big colluding banks, yeah. And this CME, who is a private, remember the CME runs the casino, runs the COMEX market. So, they own it, they make money on it, so they're making money on it. And again, they don't want to tip over the apple cart. And as far as the CFTC goes, I think they've been so, they've known it for so long, they've done nothing for so long, that for them to admit it right now would admit that they're either stupid or they're involved with it. But I'd still give them a call, and again, politely and nicely tell them that, hey, this shit's got to end, man, all right? Well, anyway, there you go. There's a tip and complaint page. Again, you can call them up. I recommend you call CME, pause my page, copy those numbers. Call them once a week. Call them once a day. Why the hell not? You know what I'm saying? They don't mind screwing with you on a daily basis. All right, well, we got through this video here, and my meme for the year, for everyone out there, whether it's economics, politics, you name it, think for yourself, folks, and always question authority. One of the wise things that Timothy Leary said. So whatever you think of, as a young man, I always, that thought that stuck in my mind. I had very few people growing up telling me to think for myself and to question authority. And when I heard this statement, it's powerful. And it's also powerful to think for yourself and question authority. And it's also just as powerful to question your own narrative, folks. Whose narrative is in your brain? Is it yours or is it someone else's? Well, anyways, that's it. This is Brian Kuzmar with Commercial Ware, Coins, and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime between 10 and 4, Mondays through Fridays. I am a local dealer only, so if you don't live in South Florida and you can't make it to my store between 10 and 4, unfortunately, I can't sell you anything. We are not an online entity when it comes to sales. But I do encourage you to find a good local dealer for a bunch of reasons. They should be able to beat the online prices like I do. They should have good experience, plus you get face-to-face service. And if you don't have one that you like in your neighborhood, hey, take an hour or two drive. I think down the road it's going to be important for you to establish a relationship somewhere. Well, that's it. This is Brian Kuzmar. And thanks for watching. Let's see what happens tomorrow, and I'll talk to you soon. Bye now.